Cryptomania, it's taking the internet by storm, and why wouldn't it? 64,000 being reached by the biggest coin in the world over the last 24 hours. But are there signs of volume spiking similar to previous cycles? And what do they mean for us as investors and traders? Today we'll discuss that along with our signs of the canary weakening. Yes, Apple continues to pressure 180, and it's doing so as we see the channel that's held all the way through this rally coming under pressure. So are we actually seeing some profit taking coming out of the Magnificent Six? And more importantly than any of that, are we seeing insiders selling the most important stock in the world right now, being Nvidia? Today, we'll discuss that along with stocks, commodities, and cryptos together. Well, welcome back everybody to one of the largest daily shows on the planet where we talk about markets around the world. We have so much to get through today and there's a lot to cover. But just a quick reminder, if you love markets like we do, you want to learn more about them, make sure to sign up for our VIP free weekly newsletter. Links in the description down below. Name, email address, it's that easy. Let's get into the insider trading to start off with. Obviously, we know Nvidia is the hottest stock right now. And we also know that insiders sold 99,000 shares of it after last week's earnings report. This was the highest level of Nvidia insiders selling since September. And you might think, okay, that's pretty bad for the stock. Well, it doesn't really mean the stock's going to go down, but there is a reason that we tend to see Nvidia stock being sold around these particular earnings reports. If you looked at something we've been talking about for a week now, we know that the last 7 times we saw a multi-year high, and of course we had a 2% up with a 2% down the way that we did this time round, we saw sell and consolidation over the next coming weeks. So no doubt there's some profit being taken, but I do think that there's a good chance that Nvidia will weaken. And we've been mentioning this, and so far so good for the weakening of that particular stock. Down on average about 11% over the next 2 to 3 weeks, and upwards of 15% is what we've seen in previous cycles. So let's take a look at what's going on in the markets right now, specifically the crypto market from a financial conditions index point of view. Now, I put this chart up here because basically what's happening is it's easier in the financial world than it was 12 months ago or even 6 months ago to potentially refinance debt. Now, this is an important factor because it's really leading to a risk on across the board. And it's not the first time we've talked about Bitcoin. We've talked about the halving cycle as well. A period of time where we tend to boost into the halving cycle, then we tend to consolidate, and then we tend to sell off for a bit, followed by further boosting at the end of the year. The Bitcoin seasonal pattern is a pretty well-known thing by now. But this time might be a little bit different. Maybe we went a little early because you can't expect the same percentage changes that you've had in previous years. This market's more mature and it wouldn't go up as much as it previously did. But what is for sure is we've just seen a plus 18% move. Now, according to previous studies, when we see plus 18% over 3 days of gain, we tend to go sideways to even down over the next coming weeks. And the consolidation could be just round the corner. More importantly, though, we might even see the famous flash crash. And the reason I say something like that is because crypto is well known to have rug pulls just like this. And with the volume spike that we saw over the last 24 hours, we may need to be paying attention to it. But as long as financial conditions continue to ease, there is a good chance that we are in a new cycle for the crypto verse, and of course, some exciting times. I wouldn't be surprised to see a well over 100K figure for Bitcoin moving forward, as of course, that is really what's due this cycle, considering the exchange-traded funds and everything else that's going into it from alternative asset investing. There also could be some good signs for gold coming up as well, which we'll talk about on the channel, so make sure to subscribe. But yes, financial conditions continue to get easier, and it's helping the cryptoverse. Some other things that might be on the horizon as well in terms of the bull cases has to be this particular chart. I'm only bringing it up because you can see here ChatGPT arguably kicked off the last AI mass investment. At the same time, if we think about it as Netscape and AOL, you can see that these runs tend to go for quite a few years. And while there will be cracks and massive sell-offs during this event, it's pretty sure that there's going to be future gains in these particular industries. It may turn into the bubble of all bubbles as well. But just remember, as per our last video, when people mention bubble, you tend not to be too scared. It's when everyone starts to bring out the big prices. Remember the other day, everyone was calling for Nvidia to 1,500 and 1,200 and 1,000? Well, it started to struggle as soon as those types of alerts came out and newspaper articles. So where will the arguable or where will the actual opportunities lie in the markets moving forward? We already know AI stocks are pretty well priced. In fact, maybe even overpriced. Are there going to be other opportunities? Well, it turns out, according to Bank of America, the EPS growth for the Russell 2K just turned more positive than it's been for a long time since September of 22. So could the Russell be bigger in terms of earnings and actual overall investment for 2024? I asked all of you over on our X account, go and check out the comments. Let's see what you guys think. We do know that the S&P 500, according to Wayne, is going to do very well over the next 12 months. And while we expect some pullbacks to occur, there's a good chance that they will be met by bull demand. 25-0 is the current read that we have for the next 12 months based on the December, based on the January and February positive results for the markets. And it's the same thing no matter what type of stat we're pulling out. In general, we have mostly bullish medium term, that is 1 year or in advance, term stock kind of ideas, because that's what the stats tell us, that's what the data tells us across the board. S&P 500 election years, though, can have rough marches. So we've mentioned that we usually see selling or weakness come through after the February period. Then we tend to sell off into March. We come to the back end, and then we usually see a rally through April. Now, March is the key here. We're almost in it. We obviously haven't seen too much selling in February so far, thanks to Nvidia's earnings, but it will be something that we're watching because usually we see weakness in the NASDAQ. And of course, yes, the Russell 2000 doesn't do too well either. But notice what we just said at the start of today's video. A big channel on the NASDAQ is starting to weaken. If that breaks through, could be very important. And one of the simple reasons why that may be there is higher for longer. Now, while we just mentioned financial conditions are better, we notice that, of course, we still have higher for longer rates. This is a component overall of what's happening. And of course, if we do get higher for longer, we see breakouts of the yield that may start to put pressure on the stock markets around the world. Some other reasons could also be the options market. The options market, let's face it, has a bit of FOMO in it right now. Not quite to 21 standard FOMO, but certainly a nice uptick in single stocks, a huge uptick in aggregates, and we're now at a point which has usually preceded selling levels or at least consolidation levels in markets for the next kind of month period. Stock call volumes you can see here on a better chart just to show you what's going on. Generally, we're looking for other signs as well, though. And like any good technique, you want to have confluence reasons. While you might be a bull on the 12-month, that doesn't mean that you have to buy every single day. At the moment, we've talked about how indices look a bit crappy, really, in terms of anything but the Russell, and it might be better to instead go for single stocks. Well, CTA advisors are also maximum long right now. And we know if they start to turn, that's going to be a big deal. We'll update it first here on the channel. I don't have any particular update from the last 24 hours, but you can see here that S&P 500 still remain max long, while there were a few sellers coming into the overall NASDAQ. And that's kind of being shown in price action as well, especially with Apple facing those issues. The idea of bubble, are we in one? Are we in one from the AI perspective? According to Bank of America, the answer is quite simply no. We're not quite at those mass elevated levels that we tend to get to in a real bubble that tends to explode. And of course, we do have also a bit of discussion that needs to be had about the Chinese market. Now, it fell over the last 24 hours, but it has been doing quite well recently. We've been talking about it. We'll cover it on the charts. And of course, we'll discuss the Lunar New Year cycle because we're at a point now where we're getting into that kind of toppy range and maybe we do see some consolidation now over the next coming weeks. Let's also discuss everything to do with rotation. Will energy rise through? Well, it looks like CTAs have been purchasing it, which is a good sign. And we put pressure back on the highs on US oil over the last 24 hours, unable to break through. Could the core PCE do it? And if it did do it, of course, what do we need to see from the core PCE? Well, we need a very good reading because otherwise we're going to go for higher for longer rates and you're going to see some big switches in the curve over the next 24 hours. Make sure to be aware that at 8:30 a.m. New York time, we will have a result and it may be moving the curve. And of course, it's going to be generally a volatile kind of period. When it comes to big options and levels that we aren't able to break right now, just remember 5100 is the key zone. A 5100 plus close exposes further positive gamma switches. And at this stage, we've got some levels around the 50-50 that could be a little bit strange from, the put side of things and maybe swaps in the market. You can see here HVLs sitting around 50-60 on the charts. Let's go over to the options world. Plenty of big options coming in. Tesla getting a little bit of call volume here, up 1.2% over the last 24 hours. We can see big drops across the board though, and retail traders most likely jumping out of stocks and going to the cryptoverse. You can see it here as well with a 2% drop in retail single stock trades. So there's no doubt money being taken out of the market, pumping into the crypto. Unfortunately, usually around those types of periods, people lose in both ways. So we'll find out whether that occurs. 58% calls, though, still coming through in this market. Let's now move over to all of the indicators in the charts, the big charts that we need to be looking at. First up, are we seeing a little bit of weakness in the market? The answer is yes, according to this particular read. We're starting to see some risk creep into the markets here. We're also seeing that the overall Federal Reserve and central banks around the world did get rid of a little bit of liquidity over the last 24 hours. So certainly a little bit of weakness coming in there, but still very solid across the board. No real moves in yields. We don't expect that to change until the next 24 hours with the PCE result. But we do know here our bonds indicator weakened big time. Now we're not quite to a new low, which will set an alert, and we'll obviously alert you guys if it does happen. But we did see bonds drop, and this is why yields didn't move that much. So it's kind of telling us that there is something maybe happening underneath the hood, and we need to be aware of that. We also see here Dow Jones Transportation Average, and of course, is this a head and shoulders? Question mark. This is something people are wondering. Home builders still looks really good. Transportations itself starting to consolidate, possibly weaken on the charts. Too early to tell for that one. US dollar. Now, this was a surprise. We broke underneath the 20 barely the other day. We talked about the idea of a scale here, possibly to the weakness side. We rallied up, we hit one of our alerts, and then we came all the way back down. It's clearly doing all this funny business ahead of the big core PCE. But if you looked at the euro right now, I would not blame people from potentially thinking that the euro is looking pretty strong. You've got break of trend line. You've obviously got an above the 20 moving average by several days, a much better break here, and a pretty damn good looking wick. So if we start to take out these highs, that's great signs for potentially swing traders and everybody else in the euro US dollar. So a nice move here in terms of regaining it over the last 24 hours. Let's move over to oil now. So oil again came into focus. Again, might be waiting for that news, but it started to put pressure on that $80 strike. Now, a breakout of $80 on US oil is going to probably push an 82.50 to 84.50 narrative move. That's going to be fairly good. And I would say that, you're seeing that also potentially in Brent as well, which is UK oil. And although it's just consolidating, they've both got pretty good basing formations. So is this some type of SOS? Then we rally through, and of course we see some big breakouts in oil. The next 24 hours probably going to be a big one for this. Now, I asked in our previous video, what type of pattern is this? And we got kind of quite a lot of responses. I almost was going to put you guys up, but there was just so many responses. Thank you very much. And maybe we'll start to do that on the show so we can all learn together. Now, a lot of people identified it as what's called a diamond pattern, where basically you see here, it kind of looks like a diamond. And when it breaks out, it's a basing style pattern. And when it breaks out, it could go either way. But obviously, in this point, we're thinking it's probably support. I wouldn't say you're wrong there. Diamond pattern certainly could be one of them. The other thing I'm looking at here is a potential Wyckoff pattern with a nice island reversal base on the low. Now, obviously, you might say, well, is this the selling climax here? Is this the preliminary support? Is this a breach out, or is this the PS? That's going to be hard to tell. But generally speaking, what you're looking for in these situations is a lot of volume as well. So if you're putting in anything here onto charts, you're wanting to know that the volume has remained elevated throughout the creation. That's one of Wyckoff's third law. And of course, if we breach out past the 0.15 ratio, it's looking really good for oil with this consolidation. So congratulations, all of you guys got it right. And why I really wanted to mention it is because there are many patterns, there are many different terms in technical analysis that mean the same thing. Whether you're a position-based trader, structure-based trader, supply-demand-based trader, one of my favorites, support resistance, or pattern just in general analysis, you'll find that pretty much most of the overall reads all come down to looking for the positions and looking for what I call position-based trading. And yeah, in this case, it was just a case of many different techniques would find the exact same strategy and the exact same levels. Cool to see. Great work. And thank you very much for answering in the comments. Let's have a look here at gold. Now, gold's sneaky at the moment. Looks like it's going to 2055. How many times have we mentioned that recently? But it did have a little sweep here. It went underneath the low, then rallied up with a bullish hammer. And obviously I was liking gold after it did this. And I specifically liked it around here with breach above here. Now it's done that. So it did this, which is a little sneaky. So I guess it's kind of gold bullish at this stage, but that's going to really require the core PCE. We know it's around the most traded zone. This is not really the ideal level for gold. But if I was going to have to pick a direction, it'd still be up at this stage. KRE versus IWM. These regional banks can't take a break. No matter which way you look at it, regional banking continues to fail in the stock market. And while you're looking at XLF and it's kind of sitting pretty well, you can see here that regional banks are coming under a lot of fire. I think over the next decade, we're going to see concentrated banks. So basically all these regional banks will get bought out by big ones. We'll see less competition, and we all know what's going to happen. One of those banks, or at least a few of them, they're going to lend pretty well. They're going to create a new product or two, and I'm sure it's not going to end well, yeah? Anyway, KRE, IWM, something I'm looking at because regional banks do continue to weaken in this market. Is this good for Tesla? Well, it's not the close everyone would be hoping for, but I was looking for strength over the last 24 hours, and technically we got it. It went up 1.16% overall by the end of the day, but it was up a little bit more. A 200 plus strike close. I think that's a pretty big deal for options traders, and obviously the trend of continuation goes on. 210, 220, be great to see it on Tesla. It's looking bullish mostly on the charts for now. Nvidia, weakness continues here, down 1.32%. Obviously weakened since that massive earnings ramp, and we kind of expect it to continue to do this. The same thing that we expect to happen with SMCI. So you can see here it's weakening across the board, and we're seeing the markets, really, I guess you would say, take back a little bit of what they've gained. And I do still expect the same thing that we've talked about for a while now, which is 3 months of sideways to even downward action. I don't really expect SMCI over the next 3 months to be making new highs and running off without us. What about Apple though? Well, the stock, it's struggling, guys. It did find buyers here, and I think this is the buyers of last resort. So this is certainly where we need to see the buyers come in for the markets. But 180 continues to get pressured. Now, if you're a buyer of Apple, I wouldn't blame you for liking this and having stops underneath previous lows or this low. But if it doesn't hold here and breach this trend line up here, yeah, it's coming under fire. Now, we've mentioned the idea that sometimes Apple breaks a big key level and the rest of the market starts to weaken really heavily. I still think this is the way it is. The canary, I often call it. And if we do break through 180, I wouldn't be surprised at all to see a 170 for Apple, which could be a good DCA for some people out there if you've been waiting for cheaper prices. Let's face it, Apple's not as much as some other stocks in the market right now, like my favorite Microsoft or anything, which is really expensive, by the way. Now let's move over to the Mag 7, and this is just kind of like a bit of a read on it, showing you guys that it kind of looks like the SPX. It's weakened for quite a few days. In fact, every day it's been opening up and then selling off. So what this is kind of telling us is that the market is overall not loving itself. Now, this is a weakness in the most important stocks in the market, being the Mag 7. If we do gap down, then we've got an island reversal. And of course, that could be a bit of a catalyst. So something to watch, island reversals on the SPX and of course the Mag 7 as well. For the Aussie market traders out there, we haven't looked at this one for a little while. It continues to try to hold its own. You can see here that it's probably waiting for some kind of oil break because, yeah, it's got 1, 2, 3 bullish kind of wicks. And at the moment, every sell's being met by bull demand. It kind of looks like it wants to ramp out, but it hasn't quite been able to do it. Maybe set alerts here. Momentum is the trade of the game at the moment when it comes to markets. Now, we mentioned before that Chinese stocks took a bashing over the last 24 hours. They went down. Some was up to about 4%. But overall, they're recovering back here. HSI has been the main indice that we're using to check out the markets. and we're looking for a 17 plus break in the future. And at the moment, it's just kind of, doing a nice little pullback in its overall rally up. And of course, this is due mostly to intervention from everybody in the country that you can think of. NASDAQ, let's take a look at this one. Big sell, 18K remains the kind of big turn point, I think, an 18K plus closure. You're probably looking at a new all-time high for the NASDAQ, guys. But for now, the weakness is here in these markets. And you can see that on the 2-hour chart anyway, it came down, it's tested this little level, which is a little level of demand. So break under this, well, there's not much holding it, you would think, for quite some time. So it could be that we're going into a flash sell, especially if we breach underneath this little level here. Already we've shown signs of weakness, which will really push that 18K to be supply and where the res kind of hits this market. NASDAQ certainly looking the worst out of them. And of course, if we go over and we have a look at the overall movement here of the NASDAQ, you can see that in our channel that we talked about, which is the Qs versus the SPY, it's coming under a lot of pressure. We're not seeing the same buying pressure that we saw every other time. When the Q SPY went down, it was bouncing really hard every single time. This point though, not so good, just kind of consolidating around in a very tight zone. All right, let's move over now to the S&P 500 itself. Potential on the real market of an island reversal if we open up in the 50-40s or below. Obviously, that is a negative sign for markets. If we go over to the US 500 for swing traders, nothing much changes. We know that swing traders won't be really interested unless the 20 moving average is closed below. So it is technically still buying at this point, and this could all be consolidation for a big breach out if the news is in the favor. So we mentioned before Bitcoin, and I want to bring up Bitcoin here because there was a large trade. And you can see here this huge doji where we went from 58 to about 64,000. Now, this is the type of volatility that you often see before weird flash crashes in crypto, or at least sideways action, usually marking a high point. Now, if you go back over to previous periods, you'll notice that crypto is well known to have these kind of massive moves followed by consolidation or even huge sell-off events. I think it's time to be incredibly cautious on Bitcoin. Obviously, I mentioned this week that I thought Ethereum would do better than Bitcoin around 52K. Let's have a look how that worked. So here's the level. Here's obviously where I thought Ethereum would do better. And we've got here 21% gain since that point, which is huge. Let's have a look at Ethereum. So, compare the oranges with everything. So we've got Monday here as the breakout, about 14. So look, Ethereum's done a little bit worse. I think it was probably, in my opinion, the safer play in terms of the rotation. And it just hit, look at this, 3478. So basically right on that 3,500 target. So for me, this was a big point, and I could see it being all a bit of a catalyst to get a little bit of slowdown now in the crypto markets. Ethereum hits 3,500, Bitcoin hits ridiculous numbers of 64K so quickly. And because it went plus 18%, we know that the stats are very geared towards sideways and downward action. So I guess why I'm making it, it's not to go and say, oh, go sell Bitcoin. I don't know if I'd really be doing that. I think it's a dangerous trade in itself. But what I am saying is that people are going to feel FOMO around the world. At least at this point, with the current read that we just got, there's not really any reason to have FOMO. And as I always say on this channel, we come from an abundance mindset. If you can, when it comes to trading and investing and anything in life, when you make logical decisions, you come from a point of not being irrational, you tend to do better. Let everyone know in the comments down below as well if the abundance mindset concept has helped you in your trading and investing journey. I'll put my hand up straight away to say it massively has helped me, so I'm sure it is helping others out there. Let's talk about the big news, because of course core PCE is coming out. This will move the market, you would think. 8:30 a.m. could be a nothing burger and fizzle out, but certainly it is going to be, on essence, a volatile time. And do remember as well to subscribe to the channel as we cover that over the next 24 hours and everything else in the world of exciting times with finances. Also, remember to sign up for a weekly newsletter, guys. Links in the description down below. Thanks so much for watching. We'll see you in the next one. Bye for now.